Hello everyone, people are connecting. Some famous names among the participants. Thank you everybody for joining this webinar in the middle of August. So I will start a short introduction while people are still connecting. So good afternoon, good morning, everyone, and welcome to today's webinar on advancing quality jobs through investment practices. ILO has been a key partner of the AgriPDP platform since its inception. In the context of the Global Accelerator on Jobs and Social Protection for Just Transition, national public development banks are helping implement the Global Accelerator national strategy in pathfinder countries. National PDPs can be a game changer here, especially in rural areas, the hardest places to reach, but also where they have the local knowledge and networks to serve smallholder farmers directly. Beyond financing, they are well positioned to help create decent jobs with real social protection, to build bridges with social protection institutions, and to report on the indicators that matter to their government. This is exactly the kind of work we want to deepen through our partnership with ILO. Access to employment is essential for sustainable development, but the number of jobs created tells only part of the story. The quality of this job matters equally. Too many workers continue to face an unsafe working condition, inadequate pay, low productivity, and limited opportunities for professional development. Public finance institutions can help change this. ILO and GIIN have co-developed the quality jobs investment strategies to help financial actors integrate job quality into their investment decision and performance measurements. And AgriPDP are well positioned to put this strategy into practice through the financing of small businesses and agricultural value chains, through the support for workforce development and their influence on labor standards. Today's webinar, jointly organized by ILO and the AgriPDP platform, will introduce the quality jobs investment strategies and share practical examples on how they can be incorporated into investment practices. This session will run for 1 hour with approximately 45 minutes of presentation, followed by 15 minutes for question and discussions. Beyond listening to the presentation, we would like this session to be a genuine exchange. We warmly invite the representatives from AgriPDPs in the audience to share their own experience, the difficulties they face reaching smallholder farmers and rural communities, but also the good practices they have developed to advance quality jobs through their investment. Dear members of the AgriPDP platform, the Q&A and the chat are for you. I would like, before giving the floor and thanking Patricia Richter, to pass the floor to Yue for some technical comments on for the session. Yue.
Thank you for passing me the floor. Hello, everyone. It's just for your information. This webinar is recorded and will be uploaded to our YouTube channel, which I will copy paste in the chat. And if you have any questions during the webinar, feel free to write them down in the chat or in the Q&A session, or raise your hand during our Q&A intervention. Enjoy the session. Thank you. And now I'll pass the floor to Patricia, please.
Thank you, Thierry and you for the very warm welcome. Let me share my screen that we can jump right into the session. I hope I am getting the screen right. Please bear with me. I hope you are seeing my screen with a presentation mode. Thank you for nodding.
Yes.
So also good. Thank you. Good morning, good afternoon, good evening to everybody. My name is Patricia Richter. I work for the International Labour Organization for a small program called Social Finance. And Thierry and you invited us to look a little bit closer together with all of you into the topic of quality jobs. This topic I know is important to all the participants here from the Agri PDBs, because I believe in most of your mission statements, actually jobs features somewhere. So I hope this will be interesting. Let's jump right into it. And we are looking forward to many questions. So brief background for those of you who are not so super familiar with the International Labour Organization. It's a UN agency, quite old. It has 187 member states, and the task really is to promote social justice through its decent work agenda. And that means realizing rights at work, promoting employment, enhancing social protection, what Thierry already mentioned, and strengthening social dialogue. How does the ILO do that? On the one hand, the ILO sets international labor standards. It creates knowledge products and research around their implementation. And the ILO also provides technical assistance and training towards implementation. Now that's the ILO. The ILO works with workers, with employers' organizations, with governments, but it also has one small program that works with the financial sector. And I would want to argue that the PDBs are part of that financial sector. And that financial sector is being dealt with in the ILO with the social finance program that works on three basically topics on financial inclusion. And I know PDBs often extend loans to microfinance institutions. So yes, this is part of what we do. Impact insurance. We already had a session in this webinar series on insurance and resilience. So we also work on this. And lastly, on sustainable investing, where we work with investors, also like PDBs on topics related to the world of work. So this is the technical work that we do based on which the presentation has been compiled. So where do we start conversation about jobs? Well, jobs matter for our livelihoods. They provide income to all of us for now, and importantly also for the future. That's something to keep in mind. They provide for economic stability of households, but also for stability and growth of communities. So that is just where we typically start, and fundamental to that conversation about jobs is actually this realization that labor rights that are underpinning jobs are human rights for all workers. So it's not a side topic, it's actually a fundamental topic. And the ILO is the anchor for these labor rights, all summarized nicely in the Declaration on Fundamental Principles and Rights at Work, where the commitments from governments, workers, and employers' organizations are described to uphold these basic human values. I guess most of you know the substance behind these fundamental principles and rights of work, but just in the summary, this is related to these basic rights to freedom of association, collective bargaining, the elimination of all forms of forced and compulsory labor, the elimination of child labor, elimination of discrimination, and the promotion actually of a safe and healthy working environment. So this is what is behind these fundamental principles and rights of work. So that's general. But why are quality jobs now critical? Unfortunately, what was on the earlier slide, it's not a reality yet out there. So we are still living in a world where we have almost 3 million workers that die each year due to the result of work-related factors. And we have almost 400 million workers that sustain a non-fatal injury every year. We have almost 140 million children in child labor, and unfortunately, agriculture is one of the key sectors there. Also forced labor, we still have almost 30 million people in forced labor. Women are lower paid than men typically. And now some crazy figures, I would say we also have almost 4 billion people that are left without access to social protection out there. And looking at current trends, we also have billions of workers that are exposed to excessive heat. So in this world of work, quality of jobs is a key topic. Well, how does it relate to the PDBs? PDBs are banks. I would just simply put it. And as such, the banks are, of course, exposed to the risks that come in through the portfolio that they finance. And this can mean that accidents in portfolio companies that lead to time lost and productivity declines result in defaults. And then you can declinate it through. I'm not going through all the details on the slide here, but these risks can also transform into opportunities for the PDBs. If the portfolio companies have a healthy and satisfied workforce, well, this results in productivity increases. So this logic will go through the whole presentation. Now, this is kind of a bit of the framing, but I think let us look into a little bit more methodology behind here, this whole conversation. We can identify 3 dimensions of jobs. And now we are getting to what's on the title of the session, quality jobs. Soon. We can identify the quantity, the more jobs. We can identify the inclusivity of jobs and better jobs. That's the quality. And as a PDB, you probably also report on the number of jobs that you helped create or sustain. This is typically a number. But methodologically already, this is sometimes not so easy. Because are we talking of a head count, or are we talking of a full-time equivalent? Are we talking about direct, indirect, induced employment? Are we talking about permanent, part-time, seasonal jobs that are being created? And I think especially the agri-PDBs, because of the sectors that you invest in, there's quite some questions around here with seasonal work, how it's being accounted for. But that is not the topic of today's session. The second element is inclusion. So how do you then, based on the jobs that you count, for whom are they? Are they helping women? Are they helping disabled people, indigenous people, local communities, older people, young people to actually enter the labor force? And thirdly, the quality dimension is the one that interestingly has the largest number of bullet points here. And that is already the program for this dimension. This is perceived to be the most complex and complicated dimension to operationalize. And that is what we also see. But what is behind this quality element? Well, a job that's a quality job needs to receive adequate earning, productive work. That simply means that what the person earns can take care of the needs of the household, of the family, now and also in the future. It means decent working hours. It means being able to combine work, family, and personal life. Quality jobs also mean that we cannot count jobs that create child labor or that contain forced labor. Quality jobs mean they need to be stable and secure, that there are equal opportunities and treatment in employment, that people have a safe working environment, and important also that people have access to lifelong learning and skills development on the job, so that they are not out of a job that changes tomorrow. Quality job means that people are motivated and that the jobs are underpinned by social dialogue and representation. So for the ILO, we typically refer to all of these 3 dimensions together as decent work. But here, for the purpose of this webinar, we separated it out because our focus should be on the quality dimension. Now, how can the PDBs advance this quality job agenda? We will try together with Carlos and also with the GIIN colleagues, with Golshan, to provide some insights here, but very bluntly. The PDBs, well, they have a sovereign portfolio. So you can do this policy influence also through allocation of policy loans, for example. So yes, there's a sovereign portfolio where you can move forward. You have private sector investments where you can advance quality jobs and typically also access to technical assistance. So we will dive into all of these three topics in the webinar today, and Carlos will mainly focus on the sovereign portfolio and dive into the technical assistance. I will later on also dive into the private sector investments. But I do one more click in order for the PDBs to really have an impact on this agenda of quality jobs. I think it's very important to know we need to be strategic. This is not a side topic. We need to be strategic. We need to have a strategy, and we need to measure and manage the impacts. Without that, we will not achieve our goals. And with that, I think I'm not sure, do I hand over directly to Carlos or to Thierry, to you? I think I just hand back to you.
Thank you, Patricia. You could have invited directly Carlos. Carlos Gamito, please present yourself, and I give you the floor.
Okay, thank you so much, Thierry. I wanted to say thank you also to the rest of colleagues from AgriPDB for organizing this event and for thinking of us at ADB to contribute to it. Also to ILO colleagues. Thank you, Patricia, for this very inspiring presentation, I would say, for sharing this approach to development finance that I think we do not look at it as much as we should. So if you allow me, I will share my screen. I have a little presentation for you. You can please let me know if you can see it correctly. Okay, so well, I'm Carlos Gamito. I am labor market specialist consultant at ADB. I thank you all for being here today. As Patricia already said, I'm going to share a little bit of our experience at ADB on how public development banks can promote quality jobs in the agricultural sector through sovereign operations and technical assistance. I have prepared 3 country studies on which I have been directly involved. The first way that public development banks can support this mission is by supporting the establishment of an enabling policy and institutional framework. And for this, I wanted to share the case of Bhutan, where we have these TA youth employment studies. We supported the government in the development of the national entrepreneurship strategy. We were not expecting that, but actually this ended up being very relevant for the agricultural sector. We had focus group discussions, interviews with young unemployed people, field visits to different infrastructures. We realized that actually agricultural entrepreneurs often face more difficulties to access public support than other type of ventures, despite agriculture being so important for Bhutan, not only in terms of job creation, but also for the economy as a whole. We discovered that the Ministry of Agriculture has some programs facilitating access to local markets for pre-startups, and also even some infrastructure grants for established farmers. But what we discovered is that the emphasis was mainly on supporting manufacturing businesses. In the diagnosis that we conducted, we assessed how entrepreneurship policy acted at the macro, firm, and individual level. So with the diagnosis, we helped to design this national entrepreneurship strategy. And there is one item that we included in the diagnosis that was the constraints that access to finance and the payment system represented for entrepreneurs, and especially, as you can imagine, for agricultural entrepreneurs, because given the inherent risk of that type of economic activity, it's even more difficult for them to get access to finance, and also the lower level of digitalization of the sector. So just very quickly about this, because I think Patricia is going to delve into this more than what I'm going to do. One of the recommendations that we had was that public development banks could provide the preferential lending, looking at the quality of the employment that was being created, instead as looking at what was the sector of operation of these ventures, which, as I said, the priority was given to manufacturing. Another way that public development banks can contribute to promoting quality jobs in the agricultural sector is through policy dialogue and also program design. In this area, we have been working with the government of Uzbekistan through this technical assistant quality jobs and the future of work, supporting discussions to extend social insurance coverage, including to informal workers. And as you can imagine, I would say probably more than 50% of informal workers in Uzbekistan, actually they work in the agricultural sector. And in this work, we conducted some research and we identified that actually for informal workers to be willing to enroll and contribute to social insurance, understanding the benefits that are provided and also trusting the institutions that are delivering these benefits is very important. Without that, even if the scheme is very good, they don't tend to sign up for that. So following this, we financed a survey by the Social Policy Lab to reach out to these informal workers, including 43 farmers, and we listened to their life stories and we tried to raise awareness among them. We also conducted an actuarial analysis to inform the design of maternity and sickness benefits, and also options to extending this type of coverage to informal workers, many of them, as I said, farmers. Another thing that we did through this technical assistance was facilitating international policy exchange. In this sense, we organized and funded a conference on unemployment insurance in Tashkent, bringing representatives from all Central and West Asian countries, and also from Thailand, Malaysia, and South Korea, so they could engage with the National Agency for Social Protection of Uzbekistan, and they could learn each other from their experiences in this type of reforms. I think it's important here to highlight the contribution of public development banks, not only as a tool to finance business development in the agricultural sector, but also as facilitators and knowledge brokers. They can help governments to build support for policy reform, and in many countries, undertaking an important reform as it can be in the social insurance system without the support of the population is basically impossible, but also developing programs and learning from international experiences. And linking this last part about learning from international experience, that is also something that public development banks can support. I wanted to share something I am currently working on with the government of Azerbaijan, that is supporting them to adopt international standards and best practices. Well, I don't know if you are aware of this. I think Patricia mentioned it, but occupational safety and health is one of the fundamental labor rights, and it's a compulsory obligation by all the constituents of the International Labour Organization. So recently, Azerbaijan ratified the Convention 187 on occupational safety and health, and we are working with them to undertake this gap assessment of their national system so we can see up to what extent they are aligned with international standards, best practices, and we can recommend ways to strengthen the system. This is very important, as Patricia already said, for the agricultural sector, because workers in this sector are typically most exposed to occupational risk, but not only that. At the same time, because of the type of workplaces they are taking, where these activities take place, they tend to be under the radar of labor inspections and of the conventional OSH system. So helping to translate these international standards into institutions, policies, and implementation is something that can really improve the working conditions for workers in general and agricultural workers in particular. To conclude, I hope that I have been able to convey a little bit of how public development banks can use sovereign operations and technical assistance to promote quality jobs in the agricultural sector through this threefold approach, helping establishing an enabling environment for private sector development, at the same time supporting the design of policies to extend social protection in the sector, and finally also by building national institutions and aligning them with international labor standards. I would like also finally to stress something that Terry was saying before. In the agricultural sector, this is particularly important because creating quality jobs requires much more than just financing investment that might create these jobs. It really requires to connect the employment that is created with access to social protection, with respect for labor standards, and with the building of institutional safeguards that actually promote these quality jobs in the sector. So that was everything from my side. I will be very much grateful to listen to any of your comments or questions. Thank you so much. Over to you, Terry.
Many thanks, Carlos, and thank you for emphasizing this role of national PDBs. We have many representatives of national PDBs in the audience, and I hope that they will share also their question and experience after the last speaker. And I will now invite Gulshan Elfman from the Global Impact Investing Network. Gulshan, please.
Sorry, Thierry, I think it's the ILO colleague who will intervene about the
Sorry.
Sorry. Yeah. Please, sorry.
Thank you, Yue. Sorry, Thierry, I still have a second part.
Sorry.
And I hope I'm getting the screen right to share. I hope I'm getting the right one. Yes, I hope we are back. Thanks, Carlos. For me, that was also interesting, listening to the approach of the ADB, also especially on that policy level work. I think that was very good also to have now in the conversation. Why? Because in the private sector portfolio of the PDBs, all these companies that are financed there, they actually benefit from the policy work that is also financed by the PDBs, because it just clarifies also the frameworks that exist for quality jobs that then the companies can implement. So where I wanted to start with this second part is, I mentioned before, very important for a PDB is to know what really is this goal. And I think from Carlos, this also came out, that on the policy side, getting the policies right, that already is part of that. But is this goal already sufficient to create impact? So, well, one can say, I know this is a bit provocative, huh? Well, can you manage things that you don't measure? Yes, if you have no choice, huh? Can you manage things better if you also measure? I think so, yes. So, yes, the intention, having a goal, is actually only a first step towards measurement and managing impact created through financing. So, with this on our minds, I wanted to share with you some of the joint work that we did probably some 5 years ago already, or 6 years ago, with a global impact investing network, where the GIIN and Goldstein here is a representative, and us came together and worked with about 150 investors, impact investors, exactly on that. How can we strategically drive investment into quality jobs? So what did we do there? We first looked at all these things that in an earlier slide you saw linked to a quality jobs. And then we thought, okay, now what do we have here? We have safety, and we have social dialogue, we have skills, we have security, stability. How does this all come together as a investment strategy? And together we identified 5. The first one was really, what can you do as an investor? You can invest in improving job skills for the future. You can also invest in improving health and well-being across the workforce in the businesses that you finance. You can also invest to increase job security and stability for workers in general, but specifically in precarious employment. Fourthly, you can invest in improving earnings and wealth through employment and entrepreneurship. Again, if you want, particularly for disadvantaged and excluded groups. And you can invest in improving rights, respect, and cooperation in the workplace. So those are kind of 5 goals that one can decide to invest in that support overall quality job creation and sustaining them. I could go on for 1 hour. Of course, we don't have this time. So that is why I will just point to some examples. Looking at the strategy, improving job skills for the future. Well, we can just first look at what does this actually cover. Think of job skills for the future. What is this? That is lifelong learning. It's technical and vocational training. That's employability, especially of youth. That's green jobs. So how can we prepare this workforce for the future, basically? And when you think of PDBs, an example could be financing, setting up a new vocational training center in rural areas. Or it could be financing modern agri equipment that can be high-tech tractors that we know are spreading all over the globe. Irrigation. So now you're asking, so how is this linked to quality jobs? Now, what we also did with those 150 investors in the GIIN was thinking about how can you measure that you have an impact on this strategy for investing and improving jobs, skills for the future. And if you take, again, an example. So if you finance setting up a new vocational training center in rural areas, how can you measure that? Well, you can have all your commercial indicators, but you could also have an indicator on job placements, placement rate, which would allow you to very clearly measure and contribute to the quality jobs agenda under your strategy of improving job skills for the future. For the other example that I brought up, financing modern agri equipment on these high-tech tractors or irrigation equipment. Obviously, this will also require training inside the house or keeping your workforce to promote them. So a good indicator could be, if this is what you want to pursue, improving job skills for the future, and you have this modern agri equipment investment, you could try to measure through employee promotion or employee training hours. And then you can tell the story, how you contribute to quality job creation. So we could declinate that through for all the other ones. And I guess I will not have the time. So I will just pick out very quick examples. For same story applies for improving health and well-being across the workforce. So that is this occupational health and safety. This is work-life balance. This is human resources management. So you could think of, in an example, you finance the importation of fertilizer or pesticides. So what would be the quality jobs element here? Well, I think the existence of an OSH policy already, and we have seen many of these importation businesses that don't have this, but they need to store the stuff in warehouses, and there needs to be an OSH policy guiding this, and then related training to this. Another example here under this strategy could be financing primary agricultural production. Here you could also have, as an example, you could try to choose occupational illnesses, or you could choose employee absenteeism as your indicators for tracing the quality elements in your investments. Third example, you finance a maize mill that runs 3 shifts. We know this is heavy work. It's highly also dominated by a male workforce, but we also know there is risk of injuries. So using this as determining what are these indicators that make sense to trace the quality element in this investment, you could think of actually tracing, hang on, where do I have it here? The injuries. You could trace employee feedback systems. Important. If you have 3 shifts, night shifts, how do people get to work at night? So those are quality elements that you can trace. We could move on to job security and stability for your workers. And here maybe I just bring up another example we haven't talked about. When you finance microfinance institutions to basically increase your outreach to smallholder farmers, because the PDBs typically do not reach out directly to the smallholder farmers, but go through aggregators. That could be a microfinance institution, or that could be an aggregator, a processor, name it. So you could you could think of looking for indicators that then a microfinance institution needs to report back to you on permanent employee ratio, or stability in agent networks that microfinance institutions actually use to reach out to smallholder farmers. All of this is related to quality jobs. And the last one, I think, no, it's the second last one, but I leave the slides with you. So there is lots that you can do when you think it through, this agenda of you have your strategy, your goal, what you want to actually achieve on the quality side. You declinate it through and you choose what is the right indicators to trace for this strategy and that investment. And by that, I have probably killed your hope for receiving from me the one quality jobs indicator that's relevant across your portfolio. The insight for me is there is no one quality jobs indicator across a PDB's portfolio. Managing quality jobs impacts is very context specific, and it requires that you have first a set of strategic goals, because they orient the investment decisions. And then you need to bring in the relevant indicators to track it. So this was heavy stuff. I show you that it's possible. Don't worry, it works. You can do it. An example collaboration that we have with an Africa Agriculture Trade and Investment Fund. So it's a real life example. where I've been working since launch with this fund that basically can invest in financial institutions, in traders, in processors, anybody along agricultural value chains. And they took exactly that approach. They first defined what is their objective, their intention, and they translated that into a sustainable investment objective, which is to unlock Africa's agricultural production potential, associated manufacturing, services, trade, financing sustainable investments across the entire value chain. And now this is where it becomes interesting. And this mission focuses on promoting inclusive growth while supporting climate action and increasing decent employment and income opportunities for farmers and entrepreneurs in Africa's agri-food sector. So this is very broad, but in a way it's already specific, because when we talked about the strategies, it's in here. It's about the inclusive growth. It's about decent employment and income opportunities. Now, that is the overall framing. And then the fund translated that into the measurement framework. A broad framework that identified 7 dimensions, impact dimensions, that for management purposes are illustrated along a graphic and a spider, where the fund can, at investment at 0, trace where an investment company stands, and then you can project where you want this investment to be in the future. And then you can trace how this impact is changing from one year to the other. So that's the generic framework. So now the big question is, where is quality jobs? Well, you would expect that it's in employment. Yes, where it is, but it is also in social and environmental management systems. And this has a very big reason, and I'm going to give you a few details here. On the employment dimension, the fund subdivides employment into some subdimensions, terms of employment, gender, working conditions, and FTE, so full-time equivalent, and the quality ones related here. So 3 of the employment ones are quality related. So terms of employment relate to wages paid. The indicators, there are a number of permanent temporary workers in the workforce, benefits provided to the workers, on working conditions, accidents, OSH training, collective agreement. So this is how, from an employment dimension, you can break it down and then collect the data to help you inform investment decisions and then improvements at the company level over time. I mentioned this other dimension of social and environmental management systems, where at first you think, yeah, what does this have to do with quality jobs? But well, it actually does have to do quite a bit, because in this dimension, and I'm sure you all require your investee companies to have social and environmental management systems in place, or you call them ESMSs, environmental and social management systems in place. In these systems, of course, you have the requirement that policies are in place. And this is what is broken down by management of S&E risks and impacts, so that you have S&E related policies in place. And OSH policies play part of this. So you see how things come together. Labor audits, they come in here. It's a bit this question, how do you get the data? A lot of the data you have at due diligence already. You can discuss with the companies for monitoring templates that they give you exactly what you need. We know this is a bit difficult, but one can persevere and get it. And I wanted to, lastly, I can't see on my screen the time, just a practical application of this framework. Food processor, integrated agribusiness in Zambia, where we did an assessment before the investment and we identified gaps in relation to ensuring quality jobs, including in OSH management and in the engagement of casual workers. So 2 things here. to topics that came up throughout the whole presentation before already. So at investment decision, the gaps were known, and there was the requirement, we need to have an improvement plan in place. So we helped during the investment period, the company to actually conduct a casual employment assessment. This can be done. This is again also a TA link, a OSH needs assessment. We developed some modules that covered safety procedures and use of personal protective equipment. Another example was using TA for a salary subsidy for a new EHS officer that then the company retained after the investment was over. This for sustainability purposes. And we did see by following through with this, that we saw actually an annual increase of 12% among the permanent workforce. The same hand, we also saw that the casual workers reduced. The big question mark behind here was, were those quality jobs that the casual workers had? And we needed to answer this question with no. So quite a number were transformed into permanent employees, but of course not all. The OSH trainings became more regular and reached more than 50% of the workforce, while this didn't even exist before. So we did see quite a number of changes that we could visualize with this nice graphic. And this is the only thing that then goes out and also goes out to investors. And for the PDBs, the investors are also your government. So this is then, if you decide choosing such approaches, you can actually collapse a rather complex conversation into a nice picture that hopefully the investors into the institutions will be able to grasp and appreciate. And with that, I say thank you. If you have questions, you can always get back once Thierry shares with you the presentation.
Thanks a lot. And indeed, we will share all the presentation after this meeting, and eventually also organize a second meeting to go more in depth in the indicator sets that you propose. So I guess now I can pass the floor finally to Coach Hanefman.
Wonderful. Thank you. And hi, everyone. My name is Gulshan Helfman, and I work on impact measurement and management at the Global Impact Investing Network, otherwise known as the GIIN. To close today, I wanted to share a few words on how we work with organizations like the ILO to create standards around measuring and managing success in your impact field, how you can really use some of our practical tools that already exist to really measure and manage impact in this space. So for those not familiar, the GIIN is a network of impact investors from around the world, working to really increase the
Can
scale
you
and
move to full
efficiency
screen,
of.
please?
Yes, sorry, it's just loading. Are you able to see that now? Wonderful. So as I mentioned, we're a network of impact investors, which includes pension funds, banks, expert practitioners, and so on, working to increase the scale of impact investing. We, on the impact measurement and management team, really focus on IRIS Plus, which is a platform for measuring and managing impact, meant to be used as a practical tool and not just a reference document. So in practice, that means investors don't really have to build a scorecard from scratch. You can actually start from our investment themes, such as agriculture or quality jobs, pick goals or strategies that match your investment, and then IRIS Plus kind of hands you a curated core metric set, which is a starter kit of metrics built for that theme. And you can use those indicators through all parts of your investment process, from due diligence to portfolio monitoring and reporting. It is entirely free, it's publicly available, and it's currently used by thousands of investors around the world because it actually starts investors on kind of a shared starting point, which lets them move impact from intention into something that's actually trackable comparable, and can be improved over time in the same way that you'd manage financial performance. Most importantly, Iris Plus is not built in a vacuum. So we work with thousands of stakeholders to develop our thematic content. As Patricia mentioned, we worked with the ILO on our quality jobs theme, and we're actually currently in the midst of developing a new theme, which is the child lens, that we're working with UNICEF and many other experts in the field weighing in on which indicators and metrics are best to use when measuring impact in the space. We've also aligned with 50 plus standards and frameworks. Again, our goal is not to create content from scratch. We love to align with other organizations such as the ILO, Green Climate Fund, and so on, to really make sure that our indicators and metrics can be used across the board and that people from around the world can compare their success and their impact or their learnings to other impact investors in the field. And here's kind of an overview of some of our key features. But for the purpose of today, as we've discussed, quality jobs is one of those themes that we've built hand in hand with the ILO. And most importantly, it doesn't treat jobs as a single number to maximize. It's organized around these 5 strategic goals, and the metrics really dive into each facet of a quality job. I really liked, Patricia, what you just mentioned of, it'd be a dream if there was one indicator to measure all of this. There's not, and I actually think that's one of the strengths. You can build upon our core metric sets. You can go through our catalog of metrics, which is 750 plus metrics, to understand which metrics and indicators are best to measure impact when it looks at quality jobs and agriculture in your geography and your space, because we understand that it's not going to be the same for everyone. Lastly, I think something really captured in today's conversation is how quality jobs and how metrics can be applied across the board, across geographies, at country levels in, for example, like Bhutan and Uzbekistan, as we heard, understanding how these investment strategies were built, and now discussing how we can use material indicators and metrics to measure and manage impact in this space. We've heard feedback before that agriculture may be one of the harder places to make quality jobs visible, but I also see that it's where this kind of coordination between public development banks, multilaterals, and standard setters really matter the most. And in a session like this, I see a lot of perspectives in one room, and it's how that kind of coordination can start to take place. I recognize we only have about 5 minutes left, so I think I'll hand it back to the team, but my email is always open. We have a feedback form on Iris Plus, and as I mentioned, it's free. So if you have any questions about impact measurement and management in this space, I'm a resource to you all. Thank you.
Thanks a lot, Gulshan. We are very lucky to have in the audience representatives from PDBs from Bolivia, Bhutan, South Africa, Colombia, Tanzania, El Salvador, Botswana, Uganda, Lesotho, Kenya, Mali, Senegal, Malawi. I might have forgotten some. Please, the floor is yours, and what would be your question or what experience would you like to share here? And how would you like us to continue this series, this new series of webinar on credited jobs? Any questions? Any remarks?
Yes, there is a question in the chat.
Yes, and Leonard Mitzi, we are very honored to have you here. Leonard, would you like to take the floor? Can you open the mic?
Yes. You're hearing me, Thierry?
Yes, perfectly. Thank you, Leonard.
Thanks a lot, and thanks to all the presentations. And we're also, as the global donor platform, we're going to zoom also with ILO on the youth aspect, because I think this is also important. Clearly, a deeper dive between the gender dynamic and the youth dynamic of what we heard today is critical. My question was more, is there any, also with what Gulshan mentioned on GIIN, is there any peer review? Because that is what we as partners really need, is the peer review of what works well and where the traction is in terms of the typology of corporates. And Patricia mentioned the private investment, where everyone speaks in the context of lower ODA and bigger, hopefully bigger private investment. typology of investment, which creates the quality jobs. Where are the quality jobs being created at scale? Is it the more export-oriented M&E type vis-a-vis the local SMEs? And how can we lift local SMEs, which might not necessarily be required to do this regulatory heavy due diligence approach that big corporates are required to do? So it's more a question of, because this also is linked to also the de-risking aspect, and how young people coming on the labor market from a formal point of view will be attracted. Will they go to a cocoa processing, cashew processing, coffee processing, or more into the local SMEs on fruit and vegetables, which are destined mainly for local or regional markets, or aquatic foods? It's more a question of typology of corporates in terms of the qualitative job dimension, and whether there are good case studies that can be scaled, that can also be the subject of South-South cooperation or trilateral cooperation. Over.
Thierry, if I
Good
jump
enough.
in.
Yeah, Patricia, would you like to start?
Yeah, and it's great, Lena, to see you here. I hope you also like the AATIF example, because the EC is a key investor into that fund and your team. So I actually only have a very short answer, because the program that I work for, we typically look at this agenda through investments of the financial sector. So I hear you talk more through FDIs, and then also linking into local value chains. For this, we have particular unit that works with multinational enterprises, and I know that they are incorporating, for example, in guidance for investment agencies at country level, criteria and advice for considering the quality jobs side. So that would be something that I think is very relevant, and happens a bit outside the financial sector. So that is not necessarily my expertise, but I can connect you to them for sure.
Thank you.
I see a hand raised. Yes, Juan Pablo from Colombia. Thank you, Juan Pablo. Yue, do you manage to?
Yes. Can you hear me over there?
Yes, we can hear you. Nice to see
Okay,
you.
wonderful. And thank you so much for all the information given in the webinar. When we talk about Colombia, formalization of jobs takes around 20% of the income when it comes to health and retirement. And when we talk about financial systems, we can see that the return of the investments made within the first 2 years is around 25%. So if we formalize jobs, especially for small farmers, the income they will get will be like somehow reduced by paying this formalization. So how would you suggest for this collaboration between what comes with the social services from the government and the financial system, if we want at the same time to reduce the barriers for them to access to financial services? So we don't want to put more requirements, but we want to ease the access to financial system. How would you bring together both things at the same time?
Oh, Juan Pablo is from Finagro in Colombia. Who would like to start to answer to the question? Patricia, Carlos?
Carlos, maybe there is some experience also on your end with this linking of the social insurance?
Yes. Well, the first thing that I would say is that this very much depends also on the social insurance framework that is in place in the country. I don't know what is the case in Colombia. Probably they have some kind of voluntary scheme for self-employed workers. I don't know if you, for example, may have social insurance scheme that is specific for the agricultural sector, as there are in many countries in Western Europe, including Spain or France. But so the answer to this, two answers, depending on the system that you have in your regulation. If you have a mandatory social insurance scheme for agricultural workers, then I think there is no doubt saying that, for example, when companies are bidding for public procurement, they are more and more the countries that they ask that you don't have debts with the tax authority or with the social security, you should not have them. No, when you are accessing funding from public development banks, they should not be funding companies that are not abiding by the rules that set the play field for everybody. Now, if that is not the case, if you don't have a mandatory social insurance scheme for agricultural workers, if it is on voluntary basis, then I think what we have been saying here, you can try to incentivize companies or agricultural ventures so that they actually promote among subcontractors or the workers that they hire, providing this type of social protection. For example, you can subsidize part of this social security contribution as part of the funding program. So those will be a little bit of my thoughts on that, but being very clear that it's not about putting more red tape. If the legislation in the country establishes that there is a compulsory social insurance scheme that agricultural workers or all workers should be enrolled, I think saying that companies are not allowed to bid for public procurement when they are not meeting that type of obligation, they should not benefit from public development bank funding if they are not meeting them, because otherwise also we can talk about how much you are distorting competition, right? So I don't know, that's my reflection on the topic. Patricia,
maybe that last point I can jump on and use. It's a tricky one, huh? For a PDB in that sense, because often you are implementing then the policies that are defined directly by government, and often there are subsidy programs linked to that. So yes, in that sense, you can possibly be a bit less strict on that profitability angle for the institution. But when we are thinking of how could PDB through the financial sector at the country level also contribute to that formalization agenda, of course, the financial sector, and especially I would say on the microfinance, financial inclusion, and they can contribute to improving formalization or formalizing informal businesses, but they can only do so much. So for them, the policy framework needs to be right, and that is what would be driving the operations of a financial institution in that field. So if a PDB would want a local financial institution to support formalization of small businesses, it could, of course, do that through providing a credit line for this purpose, but for sure also thinking of additional services that can come along. And if it is for not entrepreneurship, but for business development, because typically we would already have an informal business here, but business development training That would be a great thing for a PDB to have the technical assistance to a local financial institution to also offer. That's one thing. Or if you think of what else could be done, you can think in terms of formalizing businesses. Probably there is a huge gap on insurance. Is it social insurance? Is it mandatory insurance? Is it business-related insurance? Of course, there can be subsidies for insurance as well. But at the end of the day, whichever local financial institution a PDB works with, we need to remember that those local financial institutions need to make money. They need to be profitable, they need to be sustainable, and they need to be there the next day. So the subsidy elements always need to be carefully designed, I would say. Yeah, but we have so many examples that formalization can work. It's a big topic, but we have so many examples how financial institutions can help there. Thierry, if this is another topic, then you can put it on your long list probably.
No, yes,
Maybe
definitely formalization and risk could be a specific coming webinar. Sorry, Carlos, please.
I just got an idea crossing my mind, building on what Patricia was saying of the insurance. As I was trying to present also with my intervention, let's not forget about the sovereign operation and technical assistance, because you can promote that formalization also by supporting the government in developing the programs, the social insurance program, the social protection programs, and the policy framework for those programs adapted to the agricultural sector, to self-employed workers in the agricultural sector, and not only by directly lending to the businesses, right? In that sense, just an idea that I got right away, blending products, for example, crop insurance together with other types of social insurance like sickness or maternity or pensions. Maybe it's an idea that is worth exploring, not blending together these two types of insurance. Maybe the business or the self-employed person is more willing to pay for the social security if at the same time they are getting something that is more specific, like crop insurance for their business. Just an idea. Thank you.
Thanks a lot. Golshan, would you like to have one word of conclusion before we close the event?
Of course, and I appreciate everyone for staying a little bit over. I might zoom out a little bit to say I think it's really incredible to hear all these perspectives in the room. I know it can probably feel a little bit overwhelming to understand how do you measure and manage metrics when maybe you're in a geography where it's less supported to collect the data, or maybe you're at a smaller organization where it feels a bit insurmountable. And I just want to reiterate a lot of these standards and a lot of the tools that you might need or might help you actually already exist. So I hope to end this conversation with maybe some sort of relief or pat on the back that there is information out there, there is frameworks out there. IRIS is just one of them. And we hope to harmonize with other metrics in the field. The ILO has incredible resources. There is great information out there. We might not be the main place for case studies and for peer reviews, but they are out there. And we have quite a few impact reports on our website that help you kind of understand how other organizations are looking at quality jobs, how they're measuring them, and how maybe they're tailoring the information you heard today to their portfolio or to their region or to whatever it may be. So yeah, I'd love to end this with maybe hopefully a little bit of relief and excitement that all the information you heard here today is something that you can be involved in, and you can be excited to know that you can be a part of the impact measurement and management journey that a lot of these folks have contributed to. And maybe I'll stop there for today.
Thanks a lot, and thank you for everybody for your participation today, and for this discussion. We know that at ILO you've got a lot more material that you could share with us, and so we will ask all the participants and representatives from national public development banks to contact us with their main issues. What would you like us to dig in? So we saw many different topics mentioned here in the chat. Some are well noted also on gender and youth, and some are, maybe we can have also a separate meeting after this event. Thank you for the question in the chat. Don't hesitate to contact us after this meeting. I know that your work also, for example, on how to measure the impact on jobs for de-risking tools for like guarantees. This could be also a specific, very interesting conversation that we could have. Let's continue this cooperation with the ILO, and we are waiting for your feedback on this first meeting. Many thanks a lot. Thank you, Patricia, for proposing this event and for contacting us with this proposal. Many thanks, Carlos Goldstein, for your presentation today. Thank you, everybody, and see you soon. The next webinar, I think it's at the beginning of September, but we will share all information later. Thanks a lot.
Thank you. Have a good day.
Thank you so much,
you.
Thierry and team, and all the co-panelists. And thank you, all participants, for your input. Have a good day.